We're taking a look at the currency market now with Nomvuyo Guma, macroeconomic strategist over at Standard Bank. Thanks so much, Nomvuyo, for joining us this morning. Well, we had the rand see some weakness come through yesterday, and that, of course, with a lot of apprehension ahead of the EU summit. Now, with that summit having come and gone, we've seen a significant amount of strength filter through this morning.
Morning, Alishia. Yes, absolutely. The rand definitely seems to be riding that wave of positive global sentiment that emanated from the EU conclusion of that meeting and the statement that was released afterwards. Also seen commodity prices up today, seen Asian markets opening in the black. So all around a very positive move after that fairly conclusive resolution yesterday.
It's enough to take us off the edge of a cliff, of course, but it doesn't resolve all of the problems, Nomvuyo. I mean, what are you making of the kind of reaction we've seen so far, and just how sustainable this is, given that we're still lacking detail?
Yeah, I think that's the crucial element, Alishia. I mean, in the short term, markets have reacted quite positively to this resolution because there was also the big risk that talks could break down completely. We had the two major economies of the EU, Germany and France, appearing to be quite far apart when the talks commenced. So there's always a risk that talks could break down. So I think this is very likely a relief reaction that we're seeing on markets today. Over the medium term, we'll be waiting to see some finer details out of this summit to see exactly how they plan to achieve all of the aims that they had listed in the statement. But also there's the risk that if the situation in the Eurozone economically as far as GDP growth is concerned, should that continue to weaken much further, then even this latest deal may not be enough to stem the crisis.
Of course, volatility then set to be the name of the game, Nomvuyo. For today, is it possible, what kind of trading range have you pegged out for the local unit against the greenback?
Well, the rand has started off the morning much stronger, as you mentioned. It's currently trading in low 780 level. So should it continue to firm much further, we'd be looking for it to move into the late 770s. So that would be our base case scenario for today. But of course, going forward, we still see the rand drifting weaker. We're targeting a level of 820 by year end. But as you mentioned, volatility is still quite high. So we're probably going to see some quite fascinating gyrations in the currency until that point.
Of course, there's lots to look forward to in today's trading session as well, Nomvuyo. Let's start off locally. I mean, we've got PPI numbers being anticipated there. Your broad expectations?
We're expecting PPI to have accelerated into double-digit territory. It's overshot market expectations for the last 3 months consecutively. So we've penciled in a year-on-year rate of 10.4%. And this is despite the fact that we expect the PPI to moderate on a month-on-month basis because we have that seasonal electricity tariff adjustment. So the switch from winter to summer tariffs should see the PPI moderate on a month-to-month basis. But then base effects stemming from last year's low base, as well as the persistent pressures that we're seeing from the mining and quarrying sector, should help the PPI to accelerate. So that would again be one of the main risk factors that we're also seeing for the currency today, because that would of course filter into interest rate expectations. And given the market mood, should we see the PPI overshoot expectations, then that could dampen the chances that the MPC would cut rates next month, and the risk is that the rand would weaken as a result.
Of course, we're also anticipating the financial stability review out of the SARB, so that's something that the markets will be keeping an eye on. In the meantime, across the Atlantic, in the US, first estimates of the US GDP numbers for the third quarter are being anticipated as well. Run us through your forecast there.
Well, our forecasts are roughly in line with consensus. That's for GDP growth to have picked up from about 1.3% to 2.5% on a quarter-on-quarter basis for the third quarter. That's because there was still quite a bit of momentum in the US economy that we saw at the beginning of the third quarter. But then we had that sharp reaction on fall in stock markets that occurred mid-August. So that we think could pose some downside risk to the numbers. So the median forecast is for 2.5%. We're in line with that, but we do see great downside risk to that forecast.
Nomvuyo, always a pleasure. Thanks so much for your time. Nomvuyo Guma is macroeconomic strategist at Standard Bank.